Hello, you amazing people. You're listening to the Marketing and Coffee Podcast, the show that brings you the latest in marketing, especially in the UAE market, with your host, Lijo Etup.
Insurance is a tricky category for marketing. Today, I have Melissa Lopez, who's the Regional Marketing Director at Metlife, talk about marketing in insurance.
Hi, Lijo. Thanks for having me on your show today. First, I want to state that I'm not a formal representative of Metlife before we start, so any opinions that I share are my own and not a formal stance of Metlife as a company. But that being said, let's get into the questions.
So your career, I saw that you started with Lehmann Brothers and worked through a time when all things came crashing down. It's not similar, but it's like now the world is coming crashing down. And looking back from your perspective, what do you think went wrong and what were your learnings personally?
Sure. Thanks, Lijo. Now there's lots of movies and lots of accounts that have come out about what happened with Lehman Brothers. And I think it's a story generally of what happens when companies revert to practices that are unethical or risky to customers in the name of growth. And it highlights a deeper danger in focusing on just profits without regard for sustainability and doing what's right for the customer. Banks and broader players in the financial service ecosystem were focused on short-term gains, ignoring the risks, and thinking it wouldn't catch up with them. I think there's two lessons that really come out from this in terms of broader lessons for business. One is focusing on short-term returns is a bad strategy, and sustainable growth needs to be achieved in a sustainable way. And this means it has to be based on sound and ethical principles, firstly, but maybe more applicable to any company today is you sometimes need to invest and sacrifice short-term gains for better longer-term gains in the future. And secondly, I think principled and customer-led companies are the ones that will continue to emerge as market leaders. So doing what's right for the customer is also good business for companies, particularly with millennials and younger generations, which prefer to interact with companies that are mission-driven and who they trust. I think that it's more critical than ever for banks and insurance companies who rank very low in terms of customer trust traditionally. It's very critical for us, especially, to get that and do things that build trust and transparency with customers.
Since you mentioned trust, insurance industry is built on a world of what if. Does the industry do fear marketing? What's the communication strategy in the industry?
Yeah, I understand what you mean. I wouldn't say that insurance companies resort to fear marketing. I think it's more accurate to say that the needs that insurance solves for are scary. And so to talk about insurance itself can be a little bit scary. Typically, insurance is seen as a push product. And this is because the awareness for the needs that we solve is not top of mind for people and has to be eked out over time and through understanding and awareness. So one, people overestimate their physical wellness and their financial preparedness to deal with unexpected events. And two, they underestimate how expensive one of these major illnesses or the impact that a loss of life can bring to the financial well-being and security for themselves and their loved ones. So these are scary things to actually think about. And in order to help people understand that statistically they probably are not very prepared, you really actually have to build trust and rapport with customers to be open to this discussion. So in this sense, fear marketing won't work at all because people are already skeptical of what you have to say. They don't think they have a problem. And so either they're going to shut you out. What's more common in the insurance industry is the positive positioning that helps customers feel that they're in control of their future and they can achieve their financial goals. So this is the sort of messaging that is more typical in insurance companies. In addition, if a customer buys a product, it's really important that they understand what they bought and understood they have a need. So even if fear marketing was to get you a sale, it doesn't mean it's a good quality sale because once the fear is gone and wears off, customers are more likely to leave and close their policy down because they didn't understand the need. And insurance is one of these products in particular where ideally the customer never uses it, or if they do, it's probably not for a very long time horizon. So it makes it all the more important for people to appreciate the value that they purchased when they bought this product. And with fear marketing, that means they didn't really understand it. So positive approach is more effective in that way.
As I understand, you sell through partners, banks, resellers, etc. Hence, most of your marketing activities is in support of these partners. How does the marketing strategy differ from selling products directly?
Here's a good question. I would say every channel has its nuances, but the overarching messaging and positioning tend to be the same. I'd say the main differences between selling through a direct sales channel versus a third-party vendor is that insurance companies can influence, but they have limited control over the actual sales journey and the customer experience. Plus, the availability of customer data at the top of the funnel will vary by partner. It's therefore important to have open communication with our third-party vendors. It requires a deep understanding of their business model and goals in order to advise them on how best to weave in an insurance discussion in a way that's complementary to their core products and in a way that helps them identify who the right target customer profiles are. In a bank, for example, it might make sense to weave in the topic of insurance into a broader financial wellness discussion that they might already be having with their customers. Also, selling through third parties means that we have to consider how easy the product is to sell from a sales point of view. So even if an insurance company makes the best solution in the market, if it takes 3 hours to sell, or it's very complex or cumbersome of a process to undergo in order to purchase the product, it probably won't sell. So the journey becomes extra critical when thinking about whether a solution is suitable to a third party and whether you can take it forward in that respect.
More on the product lines. Product innovation depends on the industry, and the innovation cycle can depend from industry to industry. Does the new product pipeline in your industry, is there a long time it takes to bring in new innovations in the industry? And do you make products that is very specific to the Middle East market, or it's a product it's a global product is adopted into the Middle East markets?
Yeah. So insurance is very complex, and it requires that you price for a lot of long-term future risks, some things for which you cannot predict the future. So it does take a while before it becomes clear whether we've priced incorrectly. So if you bring a product to the market, you might not know for 5 to 10 years whether that pricing was really correct or not. So because of this risk, it takes its time. There's a lot of models, there's a lot of scenarios that insurance companies would have to do to ensure that their products are both good for the customer and the company. Because ultimately, the company has to be healthy so that we are around in 20 to 30 years to honor the promises that we're making to our customers today. So that takes some time. And then insurance is very regulated business, which is good, and it makes sense that it is. So because it is highly regulated, and we'll continue to see more consumer protection rules coming about as this is a growing area, that also takes a few months, right, for the product development and approval process with the authorities, local authorities. That I would think about 2 months for running the models and developing pricing, but also a month or two, say, for regulation. But then, however, there's other factors that would increase that time. So if you're selling via third party, you should also be aligning the product specs with your partners as well. So they want some understanding and buy-in on that solution. And also, if you have a complex journey or functionality that you want to introduce to products, that can also add to some lead time. So I've seen things take anywhere from a few months to a few years, really depending on the complexity of the product and the journey.
A lot of the buying insurance has moved online, with a lot of strong online-only players who have come into the mix. How has it affected traditional channel partners and their communication strategy? In the good old days, selling insurance was based on a lot of relationship and human interaction. How has the marketing mix changed now?
Yeah, indeed. Digital is a growing channel, and it's critical for insurance to expand its footprint in direct to consumer sales on a digital forum, just like all industries. And to your point, yes, there are many players that are doing it today. In terms of traditional players, I think digital has been embraced more till now to nurture the existing journeys and channels that we have in place, like building leads, improving contact rate and conversions. But when it comes to purchasing actual solutions online, the offering is still quite limited. And if you look, in fact, at a lot of these digital-only players, they are dealing with relatively straightforward, commoditized insurance products like car insurance or home insurance. For these, it's pretty straightforward and easy for customers to understand as compared to a sophisticated life product that you might have to pay a large sum up front and then maybe not, receive any benefit till maybe 20 years down the road when it matures. So there's just a lot of variability across the complexity of products, which makes some much more suited to digital than others. And until the journey can be cracked to support these complex products, I think there's still a very important place to play in terms of a human element and human interaction to help people really understand and make their purchases. But in all cases, we'll continue to see this digital expansion in order to meet the needs of customers and the ways that they want to purchase. And beyond just sales, I think digital offers a great opportunity for insurers to differentiate their products and services through a way that they engage customers and rate customers' risk. So, for instance, the data accessible through digital mediums and integration can help customize solutions to more customers than ever before and ensure that they're getting the best value possible. So digital is opening many new possibilities not just in terms of distribution, but also in terms of products and services as well.
A question that's in everybody's mind, and irrespective of the industry, and my question is to you for the insurance industry. Did COVID bring a boom in insurance sales, or has it been a dampener?
To use your words, I would say COVID has been a boom for the insurance industry. Looking past the initial shock and the need to rapidly adapt a traditional contact-heavy journey to the contactless forum, overall, I think it's good for business in a few ways. Firstly, and most importantly, people are feeling more aware and exposed. Seeing how COVID has come and brought such rapid change, people appreciate that their health and their financial security are not as stable as they like to think, and things can change fast. And in a world where we're charting unknown waters, people are looking for some sense of stability and a way to take some control in their lives. And insurance is really great to support people with that. And the needs of insurance, which traditionally we'd have to pry out and cultivate slowly among consumers, is already there. It's already top of mind for them. So for us, there's a lot of demand that we just have the good challenge of having to figure out how to harness that demand, how to speak to people and help them appreciate that the need that they have is something that we can solve for. So that's a great thing, a lot of demand. And then in terms of the digital adoption, going to this contactless forum, COVID has brought a rapid acceleration of digital adoption that was required in the insurance industry as an industry that was quite lagging in this area. A lot of strides have been taken, and I think it's one of those permanent shifts that won't be going back and will only continue to move forward now on the digital track in many ways, which is wonderful for the business and for consumers alike. And lastly, people's habits are changing now. What COVID will do, we'll see like what gaps our product offerings will be identified based on people's new and emerging needs that will come out of the new normal post-COVID. So it's a very interesting time to be in insurance and an exciting time. So let's see where it goes.
So great. So on that note, thanks a lot, Melissa, for coming on this podcast. It's been amazing. So for all my listeners, you can get in touch with Melissa on LinkedIn. Is that the best way to reach you for if they have any questions?
Yes, yeah, but LinkedIn is fine. Thanks, Lijo. Thanks for having me.
Yeah, thanks a lot.